Well, hello there. Welcome to Various Insurance Planning, ensuring your well-being. I am Dennis James, the Bike and Dancing Insurance Man. I'm so glad you're here to join us today. It's going to be me, myself, and I, but I have a great topic, all right? And the topic is something that is a lot of people want to know about, especially at the end of the year. Here we are, today's December 2nd, 2024. This is when we start planning and with our insurances, that our life insurance, long-term care insurance, our annuities, our retirement plans. But what you want to understand is that there's also tax deductions, all right, premium deductions. And a lot of people like to know about that. Just keep in mind that I am strictly giving you some information from the IRC, the Internal Revenue Code. All right, I'm not a tax advisor, there's nothing from a legal point of view that I am involved in. When I say that, this is going to be. I would get with your. I'm not giving legal advice, is what I was meaning to say there. All right, so you need to talk to a tax advisor. But at the same time, this is just great information that can benefit you possibly as an individual, but for sure any type of business owner, okay, or corporation. So with that being said, let's start by understanding, and I'm going to use a little cheat sheet here because I don't have all these numbers by heart. But, one of the things you have to understand when you have long-term care insurance, this is going to really relate to a traditional long-term care insurance plan and also what they call a hybrid life insurance with a linked benefit, or it could be a long-term care rider. All right, and I'll get more into that, how that works, because what you need to know is that it's the premiums, okay? They have to be separate, identical premiums that is being paid for long-term care insurance, and that would be what we consider a 7702B long-term care insurance. All right, that's what it falls under, that code that I just mentioned. And it's treated just like any kind of accident or health insurance. All right, so very important to keep that in mind. And as I talk about that, first of all, from an individual point of view, okay? Now, 2024 and 2025. Now, if you're like a W-2 individual taxpayer, you're not, and you don't itemize, there's no deduction, all right? But what is important to understand and know is that having a plan in place, right, has a lot of benefits for you and your family, okay? And just like any other insurance, but we're talking about premiums, deductions here, all right? Now, what happens is if you're a business owner, and that could be a sole proprietor, a partnership, LLC, S corp, it could be what do you call them? Where you're a PPC, like but you're not incorporated. You're filing under like a LLC or that type of thing. Then what you get is a above the line deduction. All right, and the above the line deduction is going to, a lot of times the premiums are going to be tax deductible up to your age limit. All right. So as an example, and I'm going to use the 2024. If you're age 40 or less, it's $470 premium deduction. You could deductible. You could deduct from your premium, or $480 for 2025. Age 41 to 50, it's $880 or $900 in 2025. Age 51 to 60, it's $1,760 and it's $1,800 in 2025. 61 to 70 is $4,710 and it goes up to $4,810. And if you're 71 years and older, $5,880 for 2024 and $6,020 for 2025. And those are indexed, and normally they go up a little bit every year. I know in 2023 they didn't, and that's just very, very unusual. Okay, so now if you have an HSA, when it comes to paying premiums, you can use HSA dollars to pay for your long-term care insurance premiums. All right. Now, also, I mentioned as an individual. Now, one way you can get a deduction, and it's if you itemize and your medical expenses exceed 7.5% of your adjusted gross income, and that would include long-term care insurance premiums, then there could be a deduction for you based off those age limits that I mentioned, whatever bracket you're in. See, the advantages of getting older, guess what? You get a larger deduction. All right, so sometimes, because it goes based off, every 10 years. So if that's the case, and you're getting, you may want to wait until you're into the higher tax bracket, not necessarily, but just know that if it's within a few days, then, you may want to wait to get that deduction, the full amount. All right. As far as premiums paid by employees, voluntary payroll deductions, pre-tax cafeteria plans, none of those have any kind of deductions or FSAs, that type of thing. There are no deductions. Now, your best deduction, okay, is going to come when you're a C Corp. All right. Now, I had mentioned the PCs and LLCs. If you're taxed as a C Corp and that's the way you file, then you're going to be able to take the full deduction. All right. So whatever the premium is, it doesn't come into any kind of age or bands that way. It's going to be the full amount that you can deduct for you as a employer or for any of your employees, because obviously you'd be a shareholder, and so even as the owner, being a C Corp, you can deduct that way, like a W-2 employee. So that's the advantages when it comes to the premiums, that type of thing. Now, I mentioned when it comes to the linked benefits, okay, any kind of premium that is, it has to be a lot of times life insurance you're going to be paying, right, for the life insurance. And now, if you have a separate premium that you're actually going to be able to identify that premium as long-term care insurance, then that part of it can be deductible. All cash value in the policy that's allocated for life insurance or the component of the life insurance is not. Now, you could have a long-term care rider which accelerates the life insurance amount, But if that long-term care rider is separate and identical premium, then you can deductible. So in other words, if the charge isn't deducted from the cash value, has no impact on your cost basis. All right, so it is available, but just know that it has to be very identified as a premium for 7702 tax qualified long-term care insurance. All right, now know that there's life insurance or annuity that has the 7702B is always a tax-free benefit, but it has nothing to do with the deduction. All right. Keep in mind that there are those annuities out there. If they're not qualified, a lot of times those can be used towards long-term care insurance. And there's a lot of benefits to that where you can avoid taxes with tax benefits. Now, there are short-term health plans out there which could have a home health care rider or a nursing care rider, that type of thing. And those are great. They'll normally cover you for a year, sometimes more, but they're more short-term. They're but there's no tax benefits to it in any way. All right. Then you can get these life insurance with chronic or critical care riders. And, again, there's no tax deduction on it. Sometimes it could qualify as a tax-free benefit, but keep in mind, no deductions. And it's always better, like we all know, is to have some type of plan in place versus no plan in place. Just like a lot of times business owners will use this to carve out for key employees, all right, to attract, retain employees, key people. And so a lot of times if they're paying the premium as the company, the business owner, they can deduct the premium that they're doing, as additional compensation, that type of thing. So, that a lot of times is used. When it comes to voluntary benefits, that means the employee is paying for it, so there's going to be no deduction from that point of view. If the employer is helping participate there, and it's for like true long-term care insurance, being separate, then that can be a deduction. And a lot of today in 2024, 2025, a lot of carriers are coming into the market with 10,000 baby boomers and your Gen X's and your millenniums. A lot of them are looking at long-term care insurance. It's a great added value benefit. So when you can create some tax benefits to it, then that can be just a little icing on the cake there. Let's see, what more can I tell you? Oh, yes, with spouses and dependents, okay, and I talked about the above the line deduction that way, and that is for your adjusted gross income. The benefit there for your spouse or dependents, you can also get based off their age, and get that deductible premium that way, or it possibly could be even 100% of the premium paid there. So, again, you're going to want to check with your CLTC, LTC advisor, or long-term care insurance expert, or somebody that your CPA, somebody that really knows when it comes to any kind of insurance deductions, premium deductions. With that being said, one of the things I would say is you could always go to my website. It has a lot of information on long-term care insurance. I have done 19 of these. I think this could be the 20th podcast, and most of them, three-quarters of them, have been on. Uh, it's been on either life insurance, it's been on long-term care insurance, or it's been on annuities. There's benefits to each one of them. For legacy planning, retirement planning, it's a great way to, anytime you have any kind of plan in place, you're really protecting your loved ones, right? It's going to give you peace of mind. And all these types of plans, they have what they have care coordination that comes into play. And so it gives the support. And it's a stream of income when you have any of these types of plans set up. And so something is always better than nothing. If you have a CLT insurance expert, especially if he's an independent insurance agent, he is going to be able to bring something to you, no matter who you are, even what your health issues are. There is a plan when it comes to life insurance, long-term care insurance, and annuities, with the focus on long-term care insurance. You could go to www.variousinsuranceplanning.com. You could click podcast, and you could listen to all the different experts I keep bringing in, and that could be anywhere from what you need to know about home health care or Alzheimer's, dementia. I'm going to be bringing somebody shortly in that's going to be talking about independent living, assisted living. I do have on my website the cost of care. So, you can go on there. You may know somebody that is struggling or looking for information. They could go right there and get all the different information that they would need right at the website. I can also be reached at VIP at variousinsuranceplanning.com, or you could always give me a call. My number is 248-393-3146, or my cell phone is 586-808-4378. If you have any questions, please reach out to me or one of the experts. We are there to help. This has been my shortest podcast, but I just wanted to get in and at least talk a little bit about the deductions that you can get when it comes to traditional plans or any type of a linked life insurance plan. And that when you hear linked, that's the life insurance with the long-term care insurance. But keep in mind, those premiums must be paid for the long-term care insurance in order for the long-term care insurance premium to have a deduction. All right. Wish you the best. We know that the holidays are coming up. This is a great time to get focused, write down your goals, and help others, that are looking for these type of services. Let them know who we are, what we're doing, and make it a blessed day. God bless.